How to trade currencies in 2016 pound dollar exchange part 1. How to trade currencies in 2016 pound dollar exchange part 1. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW at 24 traders, and our website is www.stochastic-macd.com. The title of the video is How to Trade Currencies in 2016 Pound Dollar Exchange Part 1. Alright, so we want to share with traders different tips and tips that they can use for trading the currency market throughout 2016 if they are trading the pound dollar currency pair. As I explained to traders in other videos, professional traders will buy or sell around key levels. Most influential key level will attract market orders. So there will be orders to buy at a key support level, orders to sell at a key resistance level. This is why how the market functions. Because the key level that we see today were before, levels where the professional have placed their trade. Now those key levels, they are not ordinary key levels. They are now available to the general public to take advantage of. So as they have bought it before there, if the price reaches this level, we will look for opportunity to buy. If they sold it there before, which is a resistance, we will look for opportunity to sell around resistance level. But one thing we need to understand is that a support can change into a resistance level. How this happen? It happens like this when the price D below a key support level, you see the pink line here, and rally up to retest that key level and find a resistance on the edge of that key level. Very simple and very powerful. And the price start going down. It has happened this year in 2016 around the pink line. The pink line that you see on my chart is a very powerful key level. Here it is, 14813. The level of 14813, is the low of 2013. Can you believe it? The low of the year 2013 is the pink line here, 14813. Professional knows that. And they know that this is a key level. This is on the daily chart. You see this daily candlestick bar? Look, the price D below that pink line and went back to retest it and found a resistance. You see this indecision here, and the price from that point onward, as soon as it found a resistance, it dropped down to the next key level, which is 14566. So it's not on the moon, it's right there in front of you. Do exactly the same thing. Trade around key level. Take advantage of high probability trade setup around key level. Ignore everything else and trade together with the big market players. All right? You want to trade with the big market players, you want to trade like a pro, trade around key levels. So as the price dropped it down from the pink line, it came back to the green line, which is another key level, 14566. Which level is 14566? It's the low of 2015. All right? 2015, that's the low there. All right? And then they sold it again. You see here, you see this candle here? They took profit, price dropped it down. They took profit, they sold it down. This is again another retest here. Break below, retest. This is this candle here on the daily chart. And then once again, that level 14566, which was a support on this particular day, became a resistance on this day. It has been converted into resistance. The market saw it and they sold it down again. Next key level from the level of 14566, which is the low of 2015, the price dropped down to this level, 14234. Which level is 14234? All right, no, 14234 is the level of the low of 2010. Okay, that's the low of 2010. 142. Okay, 34. In fact, 30. It's not the exact level. 30 is the low of 2010. Okay, I'm going to correct that now. Is the low of 2010. Okay, So this is how we want you to trade around key level. So in 2016, we want to give you some key level. So I want to show you what has happened. This is happening this year. All this you see today, it has happened in 2016. Decision was made around this key level. Decision were made around this key level. And again, decision is being made. Now again, what's happening here? Around the low of 2010, the price breaks a bowl. The low of 2010, now the price, it was a resistance price deep below it. Now the price is retesting again. We leave for the support and continue to go up. Top-down trading method, okay? The setup, the signal, and the low-risk entry point. So we wait for this candle to close today on the 25th of January 2016, and tomorrow we will monitor the reaction of the price here and see whether we're going to have a buy or sell signal using a top-down trading method without, assuming anything. We will always combine the technical analysis with the fundamental, checking the economy news at Forex Factory, at Google Finance, and also at Yahoo Finance, because it's not all about technical analysis. This is about how to trade currencies in 2016 pound-dollar exchange part 1. It makes sense? It makes sense? It's also very powerful. So if I go now to the hourly chart, you will see, George, I never look on the daily chart, or I don't even have a daily chart. Oh, I'm on the hourly chart. Look on the hourly chart, those key levels. Look, this is the pink line. Look what has happened here. Price was below it. It went up, boom, 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 on this day here, okay, on the 4th of January. See here? Went up to retest the pink line on the dot. 14813. Okay? All right? That's the low of 2013. Boom. Found a resistance. And since then, it went into a declining channel. That's why we remember break below, retest, and turn around. Turn around means the price will go in a declining channel. So since then, professionals know what is happening, and they were selling on the edge. Boom, 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 boom. All right? The price structure will determine the trading strategy. The price structure commands the trading strategy. Now, again, look at the green one. Price was dropping down from the pink one. Came here, people took profit. Now they push it back down. Now this level here, it has converted into resistance. Since then, so break below, retest, turn around. Turn around means the price will go in a declining channel. You can be patient. Here again, we have another channel again. Okay, declining channel. The price structure, which is a declining channel, will command the trading strategy that we will use. Boom, sell it here, here it went out. Now, where are we, my friend? We can see the other line on the hourly chart. If we go now to the daily chart, you'll see the line I'm talking about here, 14230, another key level. Price break below it. Now it went back above, it retested it around a key level. These are the zone where the professional will make decisions. The current market pattern on the daily chart is a declining channel, but the price is above a support level or a resistance level. Will that resistance be converted into support? Break a bow, retest, turn around. If it turn around here, what we will wait for? On the hourly chart, you'll see a rising channel. Boom, boom, boom. All right, on the edge, like a pro. Attention to the key levels. All right, it makes sense? Now, another thing I need to explain to traders, when we are trading the pound dollar, we must pay attention to the euro dollar currency pair, which is the leading currency pair. This is about correlations between currency pair. Crude oil is a market indicator for the euro dollar, which is the leading currency pair. We are trading the pound dollar currency pair. We are comparing the economy of the United Kingdom with the economy of the United States. The decisions that are made by the Bank of England and the Federal Reserve of the United States will influence, the pound-dollar currency pair. All right, there are more to this, but this is about, how to trade currency in 2016, pound-dollar exchange part 1. This is part 1. In February 2016, I will be recording part 2 for this video, when I will be talking about the short-term and the long-term equilibrium price level for the pound-dollar currency pair. Around April 2016, I will be talking about the 6th critical price level for the pound-dollar currency pair. Professional trade around key level. Ordinary traders waste their time looking at technical indicator alone. One must combine the technical indicator signal with the key level, the trading setup with the key level, all right, to make better trading, forex trading decisions. So if one is trading the pound dollar currency pair in 2016, there are key levels we want traders to watch. So as I explained to you, the price structure will determine what? Our trading strategy. Very simple, okay? So the first key levels that I want traders to pay attention to is the low of 2008. You see this tall candle here. Maybe you can see it, maybe you cannot. See, it's a tall candle 2008, the bearish season. Have this long candlestick bar here. The low of that candlestick bar of 2008 is at 14349. It's a very, very important key level. Okay, 14349. Priority to bearish signal below that level until the price reaches the next level at 14230. As you can see, if we go to the daily chart, a lot has already happened between these two key levels. All right, you see 14349. That's the low of 2008. We say priority to sell signal until we reach the level 14330. So it has happened already. Boom, down in 2016. Now the price returned back above at that level. Now because we say priority to bear a signal between the 14349 up to 14230, it means that if we find a support around 14230, we will give priority to bullish signal until we come back again to the level of 14349. So priority to bear a signal below 14349 until we reach 14230. Priority to bullish signal above 14349 until we reach the level of 14566. The level of 14566 is the low of 2015. The low of 2015. All right. So here we are. Okay. So this is how we're going to trade throughout 2016. It makes sense? It makes sense? There is another key levels that I want you to remember. I'm going to go back to the yearly chart. That level is right here, 13476. The level 134, where is it? That's not the exact level I want to tell you. Hold on, please. I want to change that very fast. 134, bear with me. 13499, okay? The level of 13499 is the low of 2009, which means if the price dip below the level of 142, okay, 30, okay, if it dip below, okay, 14230, the low of 2010, if it dip below the low of 2010, 14230, and the final resistance, we will give priority to sell signal until we reach the level of 13499. Are you with me? Let's go back again. Are you with me? Are you with me? All right, stay tuned. All right, pay attention. We are talking about the first level, 14349. Very, very important key level. That's the low of 2008. Priority to bear a signal until we reach the level of 142, okay, 30. If the level of 14230 become a resistance, priority to bear a signal below the level of 14230 until we reach the level of 13499, which is the low of 2009. On the other hand, we will give priority to bullish signal above 14349 until we reach the level of 14566. The 14566 is the low of 2015. If the level of 14566, okay, is converted into support level, break above, retest, turn around, we give priority to bullish signal above 14566 until we reach the level of 14813. If the level of 14813, the level of 14813, all right, is the low of 2013, if that level is converted into support, we will give priority to bullish signal until we reach the level of 15230. The level of 15230 is also a very important key level. Is the median line of 2015. So there are three important key levels that I want you to remember. The first one is 14349, very, very important key level. The next key level is 14566, which is the low of 2015. And the third key level that I want you to remember is 15230, the median line of 2015. If the median line of 2015 is converted into a support level, breakable, retest, turn around, we will give priority to bullish signal until we reach the high of 2015 at 15931. It makes sense? It is also powerful. As I already showed you on the hourly chart and also on a daily chart, you can see that professionals are making their decisions around those key levels: breakable, retest, turn around, conversion of support, or conversion of a resistance. Prior will change direction, we follow the price structure. The price structure will determine our trading strategy. But we are looking for, valid trading setup around those key levels. Those key levels will attract others because the professional, the bank, the hedge fund will buy at a specific price on or near those key levels. All right? Very, very important. All right? If we go now to the monthly chart, the current price structure on a monthly chart, remember what I said, is a consolidation. The price is oscillating, we can say, between the level 15931 and a level of 14230. We are now above that level of 14230. It breaks above that resistance, 14230, and it retesting right now on a daily chart. So traders will be looking for opportunity to buy around 14230. But if that level is converted into resistance, we give priority to sell signal until we reach the level 13499. It makes sense? All right. The price structure will determine, or will command our trading strategy. All right. So the current market pattern is a balanced market on the monthly chart. If we go also to the daily chart, what is the current market pattern on the daily chart? We see that the current market pattern on the daily chart was a consolidation. You can see between the red and the green line. But now something else is happening here, talking about multi-talented trading. Market geometry, you see, the bigger channel. I'm talking about this channel here. This is the width of the channel between the red and the green. Now the price is out of that channel. So what is happening here? The price is now at the projection, of half of that channel. So we project half of our bigger channel. Are you with me? This is our bigger channel. If we project half of that bigger channel down, talking about market geometry, is bringing us somewhere here. If I switch my time frame to the weekly chart, you can see that there is a support. There's this support here, which is another key level that professionals are watching. The projection of that channel using market geometry give us another key level, 13925. Remember that it's a support level between the 14230 and the level of 13499. So 13925. Note all these key levels down. Have a notebook, mark them down, and pay attention to those key levels. Also between two lines, remember the median line between the two lines. I don't want to draw too many lines, but just know that there are other key levels between two lines, which is the median line of the channel. It makes sense? It is also powerful. So the current market pattern is a consolidation, and the price is at the lower part of the consolidation. On the daily chart, we see that the price breaks above the level of 14230, and it is testing it now. Tomorrow we'll monitor the reaction of the price here. A support level can change into resistance if the price dips below that support level and find a resistance. The best approach to trade around key levels is to use a top-down trading method. So breakable retest as the candlestick is closed is a trading setup. It's a bullish trading setup. Now, by using a top-down trading method, we will manage the risk, but the price structure will determine our trading strategy. So on a daily chart, you can see that the current market pattern, though is generally speaking, consolidation, there is a declining channel here. We cannot ignore this price structure. that will determine our strategy. So if we are buying here like this, we know that there is a bit of risk in this trade because the current price structure or the medium-term price structure is a declining channel. If you are giving it a chance, break a ball retest, validation, continue to go up, pay attention to the key levels, 143, okay, 49, and also the edge of this channel. The price structure will validate our trading strategy. Do not violate the market patterns. This is the end of this video about how to trade currencies in 2016. Pound-dollar exchange, part 1. We were analyzing the pound-dollar currency pair on the yearly chart, on the monthly chart, on the weekly chart, and the daily chart. We were highlighting the key levels, price level, where the hedge fund, the big financial institutions are likely to buy the pound-dollar currency pair. When one is trading the pound-dollar currency pair, one is comparing, okay, the British pound to the US dollar, all right? Decisions that are made by the Bank of England will affect the British pound and also will affect the pound-dollar currency pair. Decisions that are made by the Federal Reserve, the US Federal Reserve, will affect, okay, the US dollar and also affect the pound-dollar currency pair. We need to understand that the leading currency pair is the euro-dollar. The pound-dollar currency pair usually go in the same direction like the euro-dollar currency pair, and the crude oil is a market indicator for the euro-dollar currency pair. But the price structure will determine our trading strategy. One must not use the technical alone. Pay attention to the economy news at the Forex factory, okay, in order to combine the technical and the fundamentals. If you see a trading signal or a high probability trading setup, make sure that these setup or those setups are taking place on or near a key level. A key level is not a magic level. A support can change into resistance, and a resistance can also change into a support. We don't want to find the market. This is about the price structure, all right? And we want to trade the price itself, not the technical alone. It makes sense? It is also powerful. In February 2016, I will be recording the second part of this video, and I will be telling traders exactly what are the short-term equilibrium price level and the long-term equilibrium price level that traders must watch. Until the next time, enjoy yourself and be very happy. If you like this video, please give us the thumbs up. If you dislike it, make sure you give us the thumbs down, all right? If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. All right, if you love our video, hit the subscribe button and stay tuned. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to trade currencies in 2016 pound-dollar exchange part 1. Speak to you soon.